Hey everyone, Adil here, and welcome to the November edition of the Surround Up. Famed economist and investor Benjamin Graham once said, "The essence of investment management is the management of risk, not the management of returns." This may never have been truer than it is today. With a growing number of unprecedented forces and events that can increase volatility and move markets over the short and long terms, investors need strategies that can both help reduce risk and provide performance potential in any market conditions. Enter liquid alternatives. Approved in 2019 in Canada, liquid alts offer investors the best of two worlds: the flexibility and diversity of hedge fund strategies, which have historically only been available to sophisticated and high net worth investors, and the accessibility, the transparency, and liquidity of mutual funds. In the term liquid alternatives, liquid refers to the ease with which investors can buy and sell these funds, just like mutual funds. Alternative refers to alternative strategies, such as short selling and the use of leverage, not to be confused with alternative assets like commodities, infrastructure, and currency. So in a nutshell, liquid alts now provide more flexibility to mutual fund and ETF portfolio managers by allowing them to utilize these alternative strategies to hedge risk and potentially add return. Typically, traditional strategies like mutual funds and ETFs are long only, meaning they tend to buy securities and hold them with the expectation that their value will increase over time. This means that in a falling market, there are limitations to what traditional strategies can do. Alternative strategies, however, can provide the potential to profit in both rising and falling markets. Through short selling, you can benefit from stock prices going down, while leverage allows portfolio managers to amplify returns by borrowing money against the portfolio and using that money to buy more securities. Alternative strategies can also serve as a portfolio diversifier, having shown very low correlation to movements of global equity markets and traditional fixed income. Since the global financial crisis of 2008, stocks and bonds have become increasingly correlated, meaning in certain market conditions, they move in the same direction. Ideally, you want stocks and bonds to be negatively correlated, meaning as one goes up, the other goes down. As a result, traditional bond strategies may no longer provide the same level of portfolio protection as they used to. And here is one of the greatest attributes of alternatives: their downside protection and risk management. Over the long term, studies have shown that performing better on the downside is more important to a portfolio value than performing well on the upside. In a world of potential inflation, low interest rates, and constant geopolitical events, portfolio construction must continue to evolve. And liquid alts simply adds another tool to the arsenal. And that's it for the November Surround Up. Until next time, always remember, there's more than one way to wealth.